Hey team, it's Sean Richard with Gateway Mortgage Group again. Hope you're having an incredible start to your week. Happy Tuesday to you. Wanted to come at you with another mortgage market update. So let's get started. Right now, mortgage bonds are sitting at 2 basis points to the upside, which is positive for pricing. 10-year Treasury is down 3 basis points. There's a lot of running room to the downside for the 10-year Treasury yields, so let's keep an eye on that this week. We've got the Fed Chair Jerome Powell speaking to us a little bit later this afternoon, so that's always the potential for a market mover. Overall, outside of that, this week is going to be very data dependent. We've got the week culminating on Friday with personal consumption expenditure. So that's going to help us get an idea of where we're sitting with things like inflationary trends and whatnot. I want you to pay close attention to the charts today. So click the Twitter link above. I've drawn a trend line, a green trend line on the charts today to show the mortgage-backed security trend over the past several weeks. And you can see that we've been obviously bobbing up and down, but every time we come to the downside, we're usually touching on that trend line and then we're bouncing back up. So we're coming to a point of a decision for mortgage bonds. They're either going to break above the next ceiling of resistance, or they're going to break below that trend line and move towards the next floor of support, which would obviously hurt interest rates. I think we are going to see that break above the ceiling of resistance, and better pricing is ahead. So let's watch that. We could see that later this week. We could see that as early as this afternoon, depending on what Fed Chair Jerome Powell says. On a similar note, we are expecting that we could see the Fed cut rates over the course of this year. We've seen primarily increased Fed funds rates over the last couple of years, but we could start to see them cut rates for them to try and combat inflation. So keep an eye out for that. That could help mortgage bonds and ultimately mortgage prices and reduce some rates even further than we are right now. So we're heading into definitely a refinance era. If you haven't refinanced yet, you may look to do that depending on what rate you're at. Maybe go into that 15-year note that you've been wanting to build equity faster. All of the above. So anyways, don't forget to leave any of your comments or questions in the section below. Other than that, have an incredible week, and I'll catch up with you next week. Thanks so much.